Hi there. In this video I will walk you through a Coinbase trade built around the bullish butterfly financed with a short put. My name is Gery and I'm the chief options expert at TanukiTrade. Coinbase was holding above the HVL and bouncing from major put support while the option flow remained relatively bullish. The goal was to target a move toward the 180 area by collecting time decay if the stock simply moved sideways. As the trade developed, I gradually removed risk by buying back the short put and scanning out of the butterfly near the major call wall around 170. With expiration approaching and price stalling at resistance, I closed the remaining position and locked in a total profit of $400. Let's see the recording. Let's look at the daily chart of Coinbase on the TanukiTrade web application, the GEX live chart. We can see here for the June 18th expiration that on the daily chart we are bouncing back from the P1, the highest or the biggest put wall on the downside, and we are just hovering around the HVL line. Right now the secondary metrics show that there is a little bit of a bullishness in terms of at least the call volume is much heavier than the put volume, and we have a very significant GEX cluster around this area. And what I would like to target with this trade is at least this area, the 180 or a little bit below 180. And I was looking for the adaptive expected move box from the web app that shows me for this expiration, the June 18. This is the current expected move range based on the implied volatility and time to expiration. So I'm not really targeting above 185 because that's the expected range for this expiration. Here you can see the risk graph of the position on Thinkorswim. You will see that this one is the shorted put. So I shorted the P1, the highest put on the downside, as a financing option for the butterflies and looking for a butterfly spread for 180, which is a little bit below the expected move range upper part. So I'm looking to target this 180, this level for this expiration. So exactly this 1 point. If the market is not moving anywhere, no problem. I have positive theta, and this one will finance the whole position. If nothing happens, I will make a little money by holding onto the position, $25 in this example. And here you can see the screenshot of my fears from the live trader account. And also we can see that this is obviously a positive delta trade. So the market or Coinbase has to go up to make money. But if it's moving sideways and delta becomes lower and lower with time, it will also make money by moving neutral in this area. If it goes below 150, that's when the position is making a loss. And I'm always buying these kind of spreads in a way that it's cash secured. So if something happens and I have to get assigned or I get assigned, then I can hold on to the position. I can buy the position. I will not be margin called. So this is the current state, and I will continue from here. I opened this position exactly a week ago in this candle, and the market bounced back from the HVL, and right now we are sitting right on the C1, which is the highest call wall. We can also see that the net GEX distribution is the highest at this strike. The net volume is pretty bullish on the upside, and the highest absolute GEX is around this level as well. We can see all the labels in here, the confluencing metrics. And I would expect the market to have some kind of reaction from this level, either rejection or continuation, but this is an important level, and that's why we always say that first you have to watch for the momentum, because at a core level or a core wall, nobody knows what will happen, if there is a rejection or if there will be a continuation. So we need to watch for the momentum. But as far as the position goes, I adjusted a little bit because I wanted to keep it a little bit more safe on the downside. And since this was a nice jump on the upside, I thought that it would be a nice idea to close the single leg which I bought for $2.85 and closed it for $0.45, or then I could make $240 by buying back the naked put. And with this adjustment, the whole structure became almost risk-free, because if the market goes down, the maximum I can lose is $20 because I closed the naked put leg. And the original butterfly that was bought for $130 is around $227 right now. I have two choices here if I want to adjust the position further, either scanning out from the butterfly and locking the gains in, or I could just roll one part of the butterfly, like this leg, the 170 leg, to 175 for not all the contracts, but half of the contracts. I could also get $2 as a credit, and I could also still maintain the positive delta of the position. Right now what I'm looking for is at least wait until tomorrow and see what happens. And if there is a continuation above C1, then I might scale out from the position. If there is a gap fill, then I have a problem with that, because if there is a gap fill tomorrow and the gap fills in here, I can lose the already accumulated profit in this position, because the $200 worth butterfly will at least half in value if the market goes there tomorrow, filling the gap, because we have only a couple of days until expiration, and this is a pretty time sensitive period. And I still have positive data in the position, but who knows what will happen tomorrow. So that's why I want to keep an eye on this position. And here you can see the screenshot of the fill. The limit order was filled for 0.45. So this is the current state. I will continue from here. It is the 16th of June, and yesterday I mentioned that the C1, the highest call wall, might stall the market a little bit. This is also the highest absolute GEX level and the highest call GEX on the upside. Actually, right now the market is around 170. And this is what's happening currently in Coinbase. And what we can also measure in here, that the net volume is a little bit more bearish in terms of the flow, because we see a much more flow on the put side here. So I have to watch for this momentum if it starts to roll back down. And since we only have 3 days until expiration, I decided to close one part of the position. This butterfly spread, one part, like half of the butterfly was sold for 210. I bought it for 130. So it's a nice profit in a couple of days, and I still left one contract in here. So that's why I made the whole position risk-free in and of itself, because if the market stays around this area, minimum I can make 190 as a profit. If it's going up, because I wanted to keep the delta positive, and if it's going up above the C1, for example, around this area, I can still make money, but theta is very close to being negative, and because we are close to expiration and the whole structure is yet out of the money. So this is why theta will become negative very soon. And here's the screenshot of the fill. 210 was the credit, and I still have half of the original butterfly open, and I will monitor this trade and see how the bearish flows comes in. And I also want to put some alerts on the chart. If it's going down below the wick of today, I want to be notified, but as you can see, it's almost filled the gap, so we will see what will happen. I will continue from here. It's the 17th of June, and the FOMC is over. The market is falling a little bit, and Coinbase is not moving anywhere. It's still sticked at the C1, the highest call wall, at 170. And since I only have 2 days until expiration, I decided to close the other half of the remaining position for the same price as I closed the previous one, for 210. So the cumulative profit became $400 on this call butterfly and naked put combination. And here you can see the screenshot of the fill from my live trader account. And as you can see, the highest call wall rejected the price movement for 3 days now, but still the flow is a little bit bullish on the upside if we are Looking at the net volume on the option side, the call volume is much more intense than the put volume, so it might be able to bounce from 170, but I'm not waiting for that. If I had more days until expiration, I would definitely wait for the 170 and how the market reacts to that in the next coming days. But since I only have 2 days until expiration, I wanted to take out the profit and close the position. So all in all, it became a $400 profit. I hope you gained some insights from the options management. If you have any questions, just let me know. Thank you for your attention. Take care. Bye. Thanks for watching. If you haven't yet, please subscribe and check out our other videos. You can always find us at the links in the description. Trade safe out there.